Okay. Okay, everybody. I think I am supposed to be starting now. So I'm going to give a little bit of time for people to join us on the system. It was kind of funny. At the end of the last session, I was saying, okay, we'll go and I'll get the next person ready for speaking. And then I realized I am the next person who's going to be speaking. So here I am. So in order to, let me see now. Yeah, we have a few people starting to come onto the stage. I'll give you another 2 minutes and then we can get started, okay? Okay, so hello everybody, and thanks for joining us on this session on Incoterms 2020, the changes. It's going to be a short session because there aren't a huge number of changes to really go through, but we'll take you through that now on the presentation. Just before I get started, I'll just give you a quick background of who I am. My name is Thomas Smith, and I am CEO of eBSI Export Academy. We run an online school specializing in international trade and trade finance. And more recently, we've started, we've been delivering courses in soft skills, in Microsoft Office skills, and digital marketing as well. So we've expanded our course portfolio from about 550 to about 330 online courses, all of which are CPD accredited. So the presentation we'll be looking at now will be an extract from our transitioning from Incoterms 2010 to 2020 course, which, as you'll see, is really a more accurate description of what the Incoterms are now moving on in 2020. So let's get you on to my presentation. Hoping that everybody can see the screen now. I'll give you a quick moment to make sure that everybody is on screen. So, Incoterms 2020. Just 1 second. Okay, I'm hoping that you all can see now at this stage, so we'll start. So, the main changes between Incoterms 2010 and 2020. First of all, Incoterms, as you all will probably know, are a set of rules, international rules, which are published by the International Chamber of Commerce. The word Incoterms is derived from the fact that each rule is an international commercial term. So therefore, international commercial terms. The reasons for Incoterms are numerous. First of all, as the volume of international trade grows worldwide, so too does the complexity of international trade transactions. So this gives rise to misunderstandings and costly disputes when sales contracts are not adequately drawn up. So the Incoterms rules are a basic requirement for the sales contract, and even for courts of law. So when you're engaging in an international contract, everybody needs to have a better understanding of what the obligations are based on one's price quotation. And so by having these universally accepted rules, it allows you to have a common language between the buyer and the seller when establishing the obligations and the division of risk between those two parties based on a specific Incoterms price. We strongly recommend that everybody should get the latest Incoterms rules book in order to be fully aware of the specific wording of those terms. So in terms of the versions that have been coming up, the Incoterms first were published in 1936 and have gone through various iterations as technology and trade practice has evolved over the years. Up until recently, we were working with the 2010 rules, and these rules have been, as you'll see, slightly revised and slightly changed for 2020 in order to reflect more accurately the practice as is happening now in the market. So the Incoterms publication consists of 11 rules that clearly set out the duties, costs, and transfer of risks involved in the delivery of goods from sellers to buyers. The 11 Incoterms rules provide a wide choice to sellers and buyers as to how they wish to share those duties, costs, and rules and risks. Each rule is represented by 3 letters. And of course, you'll probably recognize a lot of these here. The FOB, FAS, CFR, and CIF are the marine terms. And then XWorks, FCA, CPT, DIP, DPU are the all modes of transport terms. Incoterms become part of the contract of sale by express incorporation. So this provides clarity to the seller and the buyer and reduces the need to include detailed information within the sales contract. The chosen Incoterm rule can only work if the parties include a specific named place or port. So in order for us to be able to have a better understanding of what a price is, for example, if I can quote $1,000 XWorks Dublin to they will know that they have to look after all of the elements of the contract of sale from the moment of picking up the goods from my factory to bringing it to their country and covering the customs and transport costs related to that. If, on the other hand, I'm quoting somebody DDP price, then they know that all of the different elements of the export transaction will be looked after by me, and that all they have to do is receive the goods at their place of business in their destination country. The risk of loss or of damage to the goods and also the obligation to bear the costs relating to the goods passes from the exporter to the importer when the exporter has fulfilled his obligation to deliver the goods. And the Incoterms go into a lot of detail in precisely where that delivery obligation is fulfilled based on which Incoterm you're dealing with. The old structure of Incoterms was divided into 4 groups. First of all, Group E, where the exporter places the goods at his own premises at the disposal of the importer. Then the Group F terms, where the exporter undertook to hand over the goods to a nominated carrier. And then with Group C, the exporter undertakes to arrange and pay for certain costs, but without assuming the risk of loss or damage to the goods, primarily the transport costs. And then, of course, Group D, where the exporter bore all costs and risks related to the delivery of the goods. Now, there are just two groups. There's the maritime and inland waterway group and the multimodal transport ones. In terms of doing due diligence on your buyers and sellers, I suggest strongly that you do a credit report on the other party through the banks, outlining in general terms the history of the bank and in dealing with this customer. It is also possible to obtain credit reports through specialized credit agencies. You can also get a trade reference which is a reference issued by another independent entity that has been doing business with the trading partner. There's no standard format for a trade reference, but typically it's where an independent and verifiable party sets out in general terms their trading history experience. If one of the trading parties is reluctant to provide such basic information, it's clearly a warning signal that all may not be as it appears at face value. So really, when you're negotiating the Incoterm, when you're negotiating the sales contract, you shouldn't forget that at the back of all of this is a business transaction. There's money being transferred, and so therefore you really do need to be aware of your counterparty and to verify the bona fides of that counterparty. The final market price of a product will also depend on the cost of transport and packaging. So regardless of who pays these costs, whether it be the importer or the exporter, they will be reflected in the final price of the product. Therefore, the price directly influences the competitiveness of the product in the given market. It is ultimately the buyer or end consumer who pays. So irrespective of the Incoterms rule chosen, the exporter should take into account how the final price of his goods will compare to prices offered by the competition in that destination country. This is a factor that will let us know how competitive our product is in a given market. The transport costs also influence the export pricing policy. If a company sets a price for every market, this factor will be decisive. If a company implements a global pricing policy, its product price in some markets may not be as profitable as it could be. It's important to remember that Incoterms does not regulate the transfer of title or ownership of the goods. That is, when the importer becomes the owner of the goods. This is left for the parties to agree in the contract of sale. A retention of title clause can provide the seller with some security in case the owner of the goods, whereby he remains the owner of the goods until he is paid. There's an unwritten rule of American origin, the last shot, which is sometimes applied in cases where disputes arise between sellers and buyers. The last item of correspondence prior to carrying out the transaction between the exporter and the importer determines the general conditions of that contract. That's also something that you should keep in mind. In terms of the Incoterms and the exporter, some importers tend to send an acknowledgement of receipt or order confirmation forms with their orders, as well as a form with general conditions. They ask the exporter to send these documents back to the importer signed and stamped. In case of dispute, according to the rule, these will be the documents that clearly define the conditions of purchase of the importer and not conditions of sale of the exporter. This is something that you need to be very aware of and to avoid in order to not have conflicts within the sales contract and other extraneous documents. In terms of revenue recognition, the Sarbanes-Oxley Act imposes financial integrity on the publicly traded companies by making senior management personally responsible for accounting accuracy. So two criteria apply, delivery and ownership transfer. We can get rid of the ownership issue by assuming that sellers and buyers also agree that ownership should pass at the earliest possible moment. Many companies take the approach that revenue recognition is equal to delivery, as specified in Incoterms, unless conflicting with local regulation or law. So, Before Incoterms 2020, the Incoterms were updated in 2010, which removed the number of Incoterms and brought in 2 new ones, as you can see from this screen. But what happened with Incoterms 2020? Well, first of all, the process of developing the new Incoterms took about 2 years, and they went through 2 main drafts of the Incoterms as they were being developed. The text of the Incoterms 2020 rules were finalized in summer 2018. The final text included an introduction and guidance notes circulated to national committees for information. On the 24th of October, it was approved at the ICC CLP meeting in Paris. The release of Incoterms rules took place in September 2019, with an effective date of the 1st of January 2020. Some of the main considerations that were taken on board were, first of all, with respect to FCA, FOB containers, and onboard transport documents. Incoterms 2010 sought to discourage the use of FOB for containers, highlighting that because a seller selling goods using a container typically loses control of the container at the port and does not retain control through to loading onto the ship, a seller of goods shipped in containers on FOB terms is taking significant risks. Those risks are with respect to cost, for example, the terminal handling charges at the port of export. The FOB seller is liable, although not in control of those costs. And risk, where damage to the goods between delivery to the port and loading onto the ship. The FOB seller takes the risk in that damage, even though it is not in control of those risks. Therefore, a well-advised seller should use the Incoterms rule FCA. However, even if that is acceptable to the buyer, an FCA seller may be exposed to a payment risk. A letter of credit will often require an onboard bill of lading, which an FCA seller is not entitled to obtain from the carrier, who is more likely to issue a received for shipment bill of lading. An FCA seller should only obtain a received for shipment bill of lading. FCA, to accommodate this, if agreed between the seller and buyer, the issue by the carrier and tender by the seller of an onboard bill of lading. Under CIF and CF4, it was also considered, should the destination always be a port, or could it be an inland destination? Under Incoterms 2010 rules, CIF and CF4, the delivery point is on board the ship at the port of export, with carriage paid to the destination port. Therefore, under Incoterms 2010 rules, CIF and CF4 could not be used where the destination point is inland and not in a port. For example, CIF Munich Incoterms 2010 would be an incorrect use of the Incoterms rules, as Munich is an inland destination and does not have a port. The correct use would be CIP Munich Incoterms 2010. So, with respect to the new 2020 rules, they have followed 2 formats. One, the traditional format of the book, and then a horizontal format where 10 articles for each Incoterm are side by side in order to better see the differences between them. There's also guidance notes, being now renamed explanatory notes. And there has been a reordering within the Incoterms with giving delivery and risk more prominence within the obligations. So here's the reordering of the articles. As you can see here, we have delivery and transfer of risk taking more